Hello everyone, welcome once again to our video blog, and today we're going to talk about the closing costs. This is another thing. When you do a mortgage, you always have the question, how much my cost going to be? And sometimes this becomes a point of break, that you really want to go ahead with this loan, or you really want to go ahead with this deal because the cost is too much. And everyone is curious about that. What will my cost be at the end of the loan? So for that, we need to know what covers in the closing cost. So closing cost is separate for the seller and separate for the buyer. So today we're going to talk about the buyer's closing cost, because he's the one who's getting a mortgage. And there are some costs which already going to occur no matter you take a loan or not. So we're going to talk about that too. So when you offer a property, you want to buy this house in the market, you write the offer, and that offer has everything in it about the cost, and it underlines who pays what. And your real estate agent can guide you on that. But generally, typically when you go write the offer, there are some items like escrow fees. Most of the time it's split between seller and the buyer. And then the second item is the owner's title insurance, which is a very important part of the transaction. Owner's title insurance is usually the seller's charge. Most cases they pay it. And then the third thing is lender's title insurance. So now difference between this is, owner is giving you insurance to ensure the title will be transferred clear. And lender wants to make sure that title will remain clear throughout the term of the loan. So lender wants you to buy that lender's title policy. And the beneficiary is lender, just in case something happened. So the lender's money, which they are actually funding basically to you to buy the piece of property, will be covered. So that lender's title policy will be paid typically by the borrower. And after that comes the property tax, the transfer taxes. So transfer taxes is it's kind of a sales tax, and it differs from county to county. So, and that is usually paid by the seller. So that's not the buyer's charge. And the last thing is the warranty, home warranty. And it's always negotiable. Most of the cases, sellers agree to pay because it's very nominal charge, like $350 to $450. So otherwise, sometimes buyer and seller can split. So these costs: escrow, owner's title insurance, lender's title insurance, transfer taxes, and the warranty. These are the costs. On top of it, you have a loan cost. So that cost is separate. So now it comes to your lender. So your lender will charge something to you. Generally $700 to $1,200 are lender fees in most cases. So that's a lender fees. If you're not doing a mortgage, well, you are saving that fees. So that's one thing. And the second thing on the lender side is appraisal report fees. So appraisal is needed because lender wants to make sure that the piece of property you're buying is really worth it, that price which you agreed to pay, which seller and buyer agreed to pay. So that has a cost. The appraisal will not work for free. So that's usually $500 to $600 anywhere, and that's paid by the borrower. On top of it, processing fee. Sometimes there are processing fees, but now in this new financial world, you don't have a processing fee anymore. And what kind of loan you're doing, it depends upon your loan officer and you. I mean, sometimes the loan officer wants to give you a lower rate, so they have some products called borrower paid. So borrower paid means you're paying the fees to the loan officer for doing their work for you. And if you are paying the fees to the loan officer, it means that you're getting your lowest possible rate, what you call the par rate. But in most cases, lenders are the one who pay to the mortgage brokers or the loan officers, and their rates are set, from 1% to I don't know how much, and that's already built in the rates which they give you, so you don't need to worry about that part. So your cost is basically escrow, lender's title insurance, and the lender's fees, and appraisal fees. That are your cost as a borrower, the buyer, the borrower. On top of it, there's one more thing. If you want to reduce your rate down, you can buy the points. So for instance, if you are getting a 4% rate without paying a point, and if you want to get a little bit less rate, you want to get 3.75 and want to pay a point up front, that's another cost. So, but we don't recommend to do it. But if you want to live in the house 15, 20 years, makes sense. But usually in the United States, people move around, and 5 to 6 years you're gonna be living in that house. So I won't pay. I don't worry about that to buying the points. I would just want to save my money, because you're putting a big chunk of down payment to buy your first property. So you might as well save that money as your reserves. So talk to your loan officer. Talk to your real estate agent first, who you want to pay that cost. You always want to put the maximum cost towards the seller side, but it depends upon the market. If the market is hot, very hot, and the properties are moving very fast, so you might as well take some cost. And to the loan officer, they can also suggest you the costs, what lenders they're using, or if they're working for a bank, what is the bank's cost. They can tell you everything up front. So these are the costs, and there's a phenomena out there that the mortgages, you want to get a mortgage without any cost. There is no mortgage here without any cost. So if someone is telling you zero cost from your pocket, it's not true. You're paying the cost regardless. Even if you're paying zero cost, there's a way to do it, but for that you have to bump up your rate. So if you're getting 4% and they'll sell you 4.75, so that discount comes from the lender will go to you. That will cover the cost. So that's what they call it, zero cost. It's not zero cost. You're paying that. You're paying now higher interest, and during the course of the loan, you'll be paying, instead of $3,000 cost, you're paying $15,000 cost. So you're paying that cost. Even the zero cost, you're paying like 4 times of it. So you have to be very cautious when you are in this kind of situation. Ask and ask as much as questions you can ask, sir. Thanks for watching.